Realty income has found their way up lately, but the recent earnings weren't that spectacular, with a miss on FFO and revenue. On top of that, investors were disappointed in the 2025 guidance. So let's see what happened with the stock and dive into the recent earnings result. Right off the bat, revenue was reported at 1.3 billion, up roughly 30% year over year, looking really good. However, net income as a whole and on a per share basis decreased significantly, which is quite concerning. Looking at the two most important numbers here, FFO and AFFO, we see a steady increase of roughly 4%. And one of the things that I like the most about this company is the fact that they have A credit ratings. And on top of that, they have over 50 years of operating history. So it's a reliable company in my opinion. Another really important number is the net debt to EBITDA. And I prefer a range of 5 to 6.5 times. And Realty Income is looking really good at 5.4 times. In total, Realty Income has over 1500 clients and almost 90 industries, showing that they are well diversified. Looking at the individual tenants, we see that 7-Eleven is the biggest with 3.5%, together with Dollar General and Walgreens. To me, this looks very good in terms of diversification. I prefer a maximum of 10% per tenant. But people seem to be worried about these companies to go bankrupt, so let's keep an eye on those companies. Convenience stores and grocery stores are the two biggest industries, both sit in at a maximum of 10%. Overall, this looks pretty good in terms of diversification. And one of the things that comforts me a lot is the fact that Realty Income has an insane high occupancy rate, yielding above average here. And on top of that, the WALT, short for weighted average lease term, is hovering at 9.3 years, which is pretty decent for this type of company. Around 43% expires after 2034. But one thing to keep your eye on is 2027 until 2029. This is about 25% of the total. And the last thing that I want to highlight in this aspect is the fact that Realty Income carefully selects their tenants, minimizing risk for bankruptcy. And of course, these are all not guarantees by any means, but they are trying their best to prevent that from happening in the portfolio of tenants. One of the things that we almost noticed instantly when looking at the revenue is the fact that this is growing at a really high pace. And that's because the company is investing a lot of money into growing the business, something that I really like. For the full year of 2025, Realty Income expects to deliver an AFFO of $4.20 to $4.28 per share, which is a little higher versus their 2024 number, so they expect to steadily grow from here. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Realty Income is a 50 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at 13.7, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 5.3 billion, and in this graph we see that revenue went up in the long run. It has to be said that for REIT it is growing really steady and consistent. In the past couple of years, revenue really skyrocketed, also due to all the investments the company did. But rapidly expanding your business also has its downsides. Typically, when a company grows at a high pace, the margins tend to go down. And that's exactly happening with Realty Income over the past years. something to keep our eye on. Lucky for us, gross margins are increasing a little bit lately. EPS is showing similar trends as the margin and the revenue. For a REIT, it looks pretty good. Analysis expect that from here the EPS increases to $1.86 in 2028. And growth is really slowing down over the years. For the revenue, it is also looking very interesting, with an estimated revenue of $6 billion in 2027, and growth numbers are going down each year. Return on assets is sitting at 1.3%, which is a low number for a REIT. Return on equity is also looking really low. And the most important number, return on invested capital, is sitting at 2.2%, which is a low number, even for a REIT. It is a little higher versus the 5-year average, so that's the silver lining here. Current ratio is at 1.74, which is a great number for a REIT. But the fact that it is increasing isn't a good sign, so let's keep our eye on this number. And right now Realty Income has 26 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Realty Income has 450 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. The total debt to equity is reported at 67%. This indicates that Realty Income has a balanced approach to leverage, using debt effectively without excessive financial risks. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. It is actually not looking too bad for a REIT. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.7%, which is an insane number. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. Annual payout is at $3.22, and payout ratio is around 75% average, which is the average for REITs. The 5-year growth rate is at 3.5%, which is a decent number. On top of that, they increased the dividends for 27 years in a row now, which is really nice. I think Seeking Alpha is having a bug here, with showing 0 years. In here we see the dividends paid since 2015, and to me this looks really good. Realty Income really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. Again, 2024 is a bug. In this graph we see the expected dividends in 2025, 2026 and 2027. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at the historical rate from here. The increase in 2021 was supplemental. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income stock with the overall market, in this case the S&P 500. Next to that I added SPG and FRT. On the 5-year chart we see that Realty Income returned 2%, and this is including dividends. The S&P 500 returned 112%, massively outperforming Realty Income. SPG did best with 19%, which is pretty insane if you ask me. On the 1-year chart it looks pretty interesting, with the S&P 500 again beating Realty Income. But this time they had at least a close call. SPG is having a great time here with a 28% return. On the 6-month chart it is back to a low return again for Realty Income, with minus 6.5%. Meanwhile, SPG is still going strong with an 11% return. On the 1-month chart, it is Realty Income who is beating the S&P 500 one more time. And again, SPG is doing a phenomenal job. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But most recently it seems Realty Income found some momentum. So could this be the perfect time to buy Realty Income stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 15, 17 and 19%. And for the free cash flow margin I'm putting in 66, 68 and 70%. For the PE ratio I'm putting in 20 since it is a REIT. And for the price to free cash flow I'm putting in 12, 14 and 16. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Realty Income stock is around $56. I hit analyze, and we see 2 green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $53, we have a mid price target of $68, and we have a high price target of $88. To me, the mid price target is the most justified here, indicating that this stock is looking undervalued. And please let me know the price target that you think is the most justified in the comments down below. My final conclusion on Realty Income is that it is looking really good in terms of valuation. The company is increasing revenue at a high pace, and AFFO is still growing at a decent rate. However, the margins are a bit concerning to me. The juicy 5.7% dividend yield that pays you a decent amount every month is really attractive for most income investors. But let's not ignore the total 5-year return including this dividend. You'll be sitting at a negative number roughly. As of right now, Realty Income is one of the bigger REITs in my portfolio. And I'm still in the green because I'm buying the dip in most cases. Because of the recent earnings and the current stock price, I do think Realty Income is a buy. And that is exactly what I'll be doing in the coming months. Buy more Realty Income stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.